Hi, I'm Roelof Van Dijk, Executive Director of Real Estate for Informa's Commercial Real Estate Forums Group. And today I'm here with Mitchell Blaine, the Executive Vice President for Sales and Leasing of Southwestern Ontario, and Scott Figler, Senior Research Manager for Canada with JLL. And we're here today to talk about the key points in the new JLL Waterloo Region Market Spotlight. And I think what we can agree when looking at Waterloo Region, the market occupies a key geography in Ontario, for that matter. It's right along the 401 corridor, connects Montreal, Toronto, Kitchener-Waterloo, London to Windsor. Absolutely phenomenal location if you're looking for manufacturing, distribution. All of this plays into that. Key high-profile universities in the market. So that's a really good thing going for the Waterloo region. You have a lot of tech coming out of that, a lot of incubators going there. B, you're getting a really good workforce coming out of there. It's creating a lot of demand for multifamily student housing. And I imagine, some of the companies that they go on to found or work at are occupying a lot of office space. So that's really a key driver of commercial real estate for the region. But you have the industrial space, like I mentioned. You also have retail that's kind of feeding in all of this. So all of this is not new. I mean, this has been going on for years. So I guess my first question to you, Mitch, I mean, you've been playing in commercial real estate in Kitchener-Waterloo for 18 years now. You know a thing or two about the market. Why are we talking about Kitchener-Waterloo now? What's the thing that's driving this market forward? Why haven't we been having these conversations 5 years ago?
Yeah, and I think it's really benefited from the pandemic and really accelerated from seeds that were planted quite some time ago and fertile soils that have now been really blessed with some really sunny rays in a pandemic, as strange as that may sound. And it's really accelerated the growth of the region. Whether it's the diversity in advanced manufacturing, the tech community and office space, even into some of the more core areas and intensification that we're seeing in mixed use developments. So a very dynamic market that no doubt has accelerated and benefited over the last 2 years. But it's really come as a result of the investments that were made by a bunch of different stakeholders over the course of what is decades in the past.
And I would add on to that, to your question, what has changed, or why are we talking about this now as opposed to 10 years ago? Another answer is, over the last few years, population growth in the Toronto area is leading to a lot of pressures on the housing market, and we're starting to see a lot of population outflow from the GTA. If you look at StatCan's census stats over the last few years, the fastest growing areas in Canada are not your Toronto, Vancouver, Montreal. It's Waterloo Region, London, Ontario, Kelowna, BC, Abbotsford, BC. So these are cities that are experiencing a lot of demographic spillover as a result of the housing affordability issues, most notably in Toronto and Vancouver. And of those cities that, these kind of emerging urban centers across Canada, we think that Waterloo in particular, has a lot of growth potential for all the reasons that we laid out in the report. But also, if you think about, the population that's, it's not just Waterloo, but if you consider the population within a 45-minute driving radius, you have London, you have Hamilton, you have Guelph. So it's a population of over 2 million people within a 45-minute drive, which when you think about it in the context nationally, that makes it really the fourth biggest urban conglomerate in Canada. So we hear a lot of talk about the VETCOM markets. Well, Waterloo, by many metrics, it has a higher population, a higher student population than all but 3 of those markets that we are always talking about.
That brings us to, I guess, another question. I mean, we're seeing a lot of population growth in the Waterloo region over the last few years, like you mentioned. Is that sustainable? I mean, was that pandemic induced? Is that sustainable after the fact? Does that population growth create a new dynamic in the market where all the things that people were trying to get away from in Toronto, congestion, high property prices, and what have you, is that now coming to play in the Waterloo region? Is that going to impact growth here?
I mean, being born and raised in the region, no doubt you've seen increased congestion. You've seen what was a very small community really start to mature and grow and move to the next level. But at the same time, it still offers what I would argue, whether it's commercial real estate or housing, as Scott mentions, real strong relative value compared to Toronto with the accessibility. And arguably, the Waterloo region, southwestern Ontario, may not be a place for those to relocate to that are in Toronto, but no doubt there is a lifestyle element that balances cost and value and accessibility still to Toronto that has definitely seen a lot of traction from those in Toronto looking for a little bit more reasonable cost of living as well as a level of lifestyle that's nearby.
And I guess the other question, I mean, you talked about things that people were doing for years. I mean, different stakeholders were doing for years to prepare the region for this growth. Is the infrastructure in place? I mean, do we have proper public transit? I know we've been talking about the light rail in Kitchener-Waterloo for years now. I mean, is it ready, or was it ready for this influx, and is it ready to continue serving the population as it grows?
If I can take that one, I think light rail transit and the LRT in Kitchener-Waterloo, was, if not the biggest infrastructure investment our region has ever seen. And pre-pandemic was supported. It was really championed. A lot of our planning policies in the area of where growth was to come through densities and residential development, retail centers, even employment areas of where office space and office workers may be, and industrial workers, was really driven by that investment. In a pandemic, where we couldn't even be in these kind of environments, definitely called attention to that investment in a negative way. But what we've seen very quickly is a rapid rebound of the use of that investment. And I mean, we had a pandemic. We have to be careful that we don't draw rapid conclusions to what was a very black swan event, and that the longer term trends and needs for things like the LRT are really there to support what the long-term view is going to be and what the long-term need of the community is going to be. So we put those investments in well before the pandemic. They were questioned in a lockdown state, but no doubt as we reopen, re-enter, and arguably as those in major markets look for relative affordability close to Toronto, will pay a lot of dividends as we continue to kind of come back out of a pandemic.
Yeah. And going back to the population side of the discussion, I mean, people don't generally move for a short term if they're buying a property. I mean, it's a big investment. A lot of money is involved in that. So I completely agree with what you're saying there. I think another part of the question mark of Waterloo region for me is, I mean, this is a market that everyone's always talking about. Waterloo, it's tech, very tech focused. You have the universities start feeding this, like I mentioned before. You have a lot of these tech companies. BlackBerry was, one still there. Not Research Motion, but Google, OpenText. All these companies were in play, or are in play. Are you hitting a saturation point where this market is too concentrated on one industry? Is that happening? Is that a concern? I feel that the region has reinvented itself over the years, but where are we here?
I mean, from a local lens, one of the things I would say I'm most proud of our community is the fact that we have an ability to really diversify our local economy and reinvent ourselves. I mean, once upon a time, the Waterloo region was heavily driven by the textile industry. The automotive industry has been a big center of commerce for the region for many years, and it too is going through some transitions as we move to EV. The tech component is very important. Companies have been innovating in business for forever. And no doubt technology is always going to play a part in that. I would argue that locally we've got institutions in the University of Waterloo, Wilfrid Laurier University, and Conestoga College, and University of Guelph that really promote that ability to be leading edge on research and development of what the next opportunity or the next growth, the next cycle, the next whatever paradigm shift might be, and be part of it as a region and be leading it. So we've had an incredible ability to reinvent ourselves as a community. And no doubt, if we do see any type of churn, whether it's technology, as we saw with BlackBerry, in BlackBerry's changing times, the whole region actually benefited through further diversity and new investment in different ways. I'd be curious for Scott's opinion, though, from an outsider perspective.
So I think that when we use the word tech, it's kind of it's a big umbrella. There's a lot of different types of companies within that. I think one of the reasons why we're really bullish on the Waterloo economy is because it's not just a bunch of people developing apps. You have in Waterloo the convergence of a tech sector with the manufacturing sector. And that's where you start to see a lot of applications with robotics, with 3D manufacturing, electric vehicles like Mitch was talking about, life science, biotech. So it's the application of this technology, it's the intersection of technology and manufacturing that I think is the unique thing that Waterloo brings to the table. And that's not going to go away because, once you think about the strategic location, you're very close to the Toronto area and that consumer base, but you're also very close to two US borders and you're along that automotive corridor from Detroit to Toronto. So even if we do see a downturn in the tech market, I think a lot of those applications are being driven in industries that we would call essential industries or core industries that perform very well even during the pandemic. And so I think that's a unique thing that you really need to consider.
One thing I may add on top of that is the food sector, which you look at a place like the region of Brant and Brantford has seen a massive investment and growth in the food sector. Food technology has been a big thing. And I mean, considering the state of the world right now, maybe if not one of the most critical things that we need to make sure that we've got innovation in and investment in for production of our own food sources and distributing it to the world. So, again, that's that diversity in the ecosystem that I think really allows the region to reinvent itself if needed, but also gives a lot of conviction to the long-term potential of the region. What the exact picture looks like, how it's going to look in 20, 30, 50 years from now is still very opaque, but no doubt the region with some of the institutions we have really gives an opportunity to reinvent itself with the world. So pretty excited for that.
Yeah, absolutely. And I do want to get back to the strategic location in a moment, but I hate to go back to the beginning of the tech discussion. We've heard about a few layoffs in the tech sector in the last 6 months. I mean, that's really being talked about a lot. Is there some concern about how that might impact the Waterloo region office market, for instance? Obviously, it's more than office, and we'll talk about the different sectors in a moment. But that sector, I think, is key right now, especially because it's coming off of the pandemic when everyone was working from home and driving people back to the office, and now you see a potential pullback from those users.
So we've actually done the homework on the rebound and the leasing volumes done, and no doubt Waterloo Region, Southwestern Ontario, like every other market in the world right now, the office space narrative has its challenges in front of it. However, what we're finding in the region is, again, it becomes about relative value and lifestyle. And not suggesting that Waterloo Region, Southwestern Ontario, is for every office tenant to relocate to, but no doubt you have seen an uptick in consolidation work in markets where you have really strong quality, access to a very technical and readily available labor pool, which the Waterloo region offers, and still offers the connectivity to Toronto. So yes, there are some definite challenges in technology space, office space, but you would argue that because of the state of what the Waterloo region offers in the way of value, it should see some real strong rebound as we reopen offices.
Yeah, and I think with the office market in general, it's just way too early to tell how this is going to play out. I think we have obviously vacancies going up across the board, but we're sort of we're at a moment where we don't really have a lot of visibility into how this is going to play out, because a lot of tenants are waiting until their lease expiration to make a decision on whether they downsize, whether they grow, if they open up satellite offices. But one thing that we're seeing that would play into the favor of a market like Kitchener-Waterloo is that you have companies like IWG, which manages Regus co-working. Their plan to open up in secondary, tertiary markets across Canada is pretty aggressive. And so their thesis is that because a lot of companies these days have a workforce that's much more decentralized across Canada, instead of having all your workforce in Toronto, you have people in Niagara, Guelph, Hamilton, London. Because of this outflow of population during the pandemic, a lot of companies are going to be more amenable to opening up, maybe not a satellite office, but maybe leasing a co-working center where some of their more dispersed population can come in a few days a week and work from. So that could play into the favor of a city like Waterloo.
And I think unlike some really small centers, Kitchener-Waterloo, Cambridge, Guelph offers enough scale to offer lifestyle amenities for staff. You start moving into some of the more rural communities, yes, trying to find labor availability or even, the lifestyle element can be a bit tougher. But I think that's where, it's not too hot, it's not too cold, it's just right to be part of the rebound as we all go back into offices.
Since we're drilling into office a little bit here, I know historically the suburban office market in KW has, done quite well with a lot of the tech, but you've seen some new construction downtown as well. How are the markets performing downtown versus the suburbs? Or downtowns, because it's Kitchener, Waterloo, and Cambridge, and you name it.
So that's a good question. There's a lot of momentum. And you're probably better positioned to answer this, being local boots on the ground. But from what I've seen, there's a lot of momentum in downtown Kitchener along the LRT line, and it's not just office; it's retail, it's multifamily. They're raising the zoning allowances for rental and condo buildings, and so you have a lot of momentum in all these different sectors, and they're sort of self-reinforcing, all of them, and they're making it kind of a more dynamic region. But we do see, as it relates to office leasing in particular, if you look at leasing in that corridor, that LRT corridor that goes from downtown Kitchener to University of Waterloo, office leasing net absorption within that corridor as a percentage of the total stock is actually very high. It's something like 7-8% of inventory that's been leased. If that same figure in Toronto is around 3-4%. So that tells us that there's a lot of leasing momentum happening along that LRT corridor within Waterloo, and it's partly office, but it's also it's a retail story, it's a multifamily story as well.
And there's no doubt there's nuances to each sub-market within the greater region. If you look at some of the business parks and office developments around the University of Waterloo, you find there's a lot more startup kind of ecosystem, more affordability, a bit older stock, if you will, where you're seeing the activity in, say, the downtowns like downtown Kitchener are more of your enterprise scale operations. Because truthfully, aside from BlackBerry's surge, we hadn't seen much in the way of new office development in Waterloo Region in particular until recent. And the real quality stock, which is one of the things we're noticing from some of our tenant clients, is they're looking for quality. They're looking for a way to use office space as a place for people to come. To Scott's point, it's still very, very early to draw a complete conclusion, but no doubt we see the downtown, say, of Kitchener, where the new stock is, to perform well, especially by some of the larger tenants that are looking for that real high quality, LEED certified type offerings that truly can afford to pay a higher rent than, say, a startup that needs to be near the University of Waterloo. So it depends on the part of the area that you're looking at.
And I guess on a similar tangent, you talked about demand for residential along the LRT and what have you. How is the multifamily market performing there? I mean, we've seen falling vacancy rates, rising rents. I mean, I imagine the story's similar, but to what extent?
So the multifamily market is very strong. According to CMHC stats, 2% vacancy for the region. You compare that with about 5% for the city of Toronto and 3% in the Toronto suburbs. You have rental growth of 5.5% from 2020 to 2021, compared to about 5% in the 416, and again, about 3% in the Toronto suburbs. So by those metrics, it's definitely outperforming. You're seeing record supply, record construction, both on the condominium and the rental side. And we're seeing a lot of the largest funds in Canada, whether it's Starlight, Quadrille, Equiton, a lot of institutional players that are starting to take note of this trend, and they're making a bet on Waterloo Region. So it's the multifamily market is definitely one of the strongest stories going for the region.
The one thing to keep in mind as well is there was a massive shift in planning policies in the region when the light rail transit system investment was made. And so what was a market that was all single family bedroom community type planning policies, within a very short period, about 10 years ago, shifted to a higher density to meet those growing needs. And really those planning policies have supported those inflows of new residents and the ability to develop higher and more dense stock for rental or for condos.
That said, I think it's important, going back to a question you had earlier, which was, as Waterloo Region grows, is it going to be subject to the same issues that led a lot of people in Toronto to move there in the first place? I think there's some cautionary tales there. And when you look at, from an investment, from a landlord investor perspective, clearly 2% vacancy, 5% plus rental growth, that's a statistic that really stands out to you. But when you look at it from the perspective of someone looking for an apartment, I think this is where, leaders in government, leaders in the private sector, I think they would be wise to look at what's going on in Toronto, study what's going on. They have a little bit of a head start because they can sort of plan for this growth in a more nimble way than a huge city like Toronto. But if the housing supply doesn't keep up with the influx of demand, you could have a situation where you're seeing the same issues now in Waterloo that we're seeing in Toronto in a few years. So it's something to keep an eye on.
Yeah, absolutely. And not to take a back seat to anything, the industrial market. I mean, we know it's a strategic location on the 401. We know, manufacturers, you talked about that and how that's evolving with the EV and what have you. Distribution, how's the industrial market performing on a leasing front, construction front? How's that going?
The industrial market in the region has always been a very important part of the local economic ecosystem. Lots of legacy manufacturing, like I mentioned, there was the textile industry, automotive, and now you're seeing more advanced manufacturing come into play, whether that's EVs or some new markets. At one point, we were one of the largest producers of solar panels as well. And so no doubt it's a very important manufacturing sector for the region, the province, the country. But what has really accelerated it is the distribution space, warehousing, e-commerce. As a growing population in Toronto and the periphery, including the region, has grown in population, we need to find a way to support these growing populations with goods. And ultimately, that has seen a really robust growth in the last 2 years, in particular during the pandemic. But again, whether a tenant or a developer investor, there is strong relative value with still proximity to Toronto. We aren't Toronto pricing, and we are not necessarily rural community pricing, but there is a strong relative value compared to the Toronto market, and we're seeing a lot of tenants and investors alike see really good opportunity in that.
When you say pricing, you talking lease rates? Like what are we talking about in the region right now?
If you were looking at a new development in Toronto, and it's very nebulous right now on where pricing really will settle, but you may be looking north of $20 per square foot net for brand new industrial stock. If you look at a market like Brantford, for instance, where we've seen a real surge in large investments into the industrial sector, pricing could be anywhere from $12 to $14 per square foot. It's a significant value savings. And you do see different types of industries going to some of the different submarkets. What we're noticing in Kitchener, Waterloo, Cambridge, and the Waterloo region is that it's attracting a higher tier of employment in the way of advanced manufacturing due to its proximity to the universities. And so pricing tends to be a little bit higher than, say, a region like Brantford, but again, still very well priced compared to Toronto, and candidly only being, give or take, 35, 45 minutes down the highway.
So yeah, I mean, I guess so we've talked about it a lot on a leasing front, commercial real estate. Let's talk about it from an investment point of view. I mean, obviously, again, hitting back at that strategic location of the industrial market, for instance, but the market in general. When you have investors that are looking at Toronto, for instance, obviously there's a spillover of those investors into the Waterloo region. Some of them are looking for maybe just opportunities to build. They can't find it in Toronto, I imagine. Some of them are potentially following some of their tenants who are looking down the barrel of a renewal that they can't afford, and maybe get some opportunities in your portfolio with some more affordability. So I guess when you guys are looking on the investment side, what is driving that? Or is it local players? Is it people coming from outside of the GTA looking? Is it foreign, institutional, pension fund, REITs? Like who's out there looking for space, and why?
Well, it's 60% private group, Canadian private groups, but that's actually a story that's common across Canada. Private buyers are really kind of dominating the investment landscape right now, more than they have been really any time in the last decade. But the difference in Waterloo region is that you actually have a lot more interest from fund managers, REITs, and even some pension funds who pretty much across the board have been selling a lot of real estate in Canada to then redeploy globally. We've seen them investing in land for industrial projects, for multifamily rental projects. So it's sort of a mixed bag. It's a much more diverse pool of buyers than what we see in other regions. And a big part of that is the relative yield that you get in that region versus Toronto. If you think about a typical cap, I mean, who knows what cap rates are right now, but let's go back 3 months when industrial was at, let's call it 3.5% in Toronto, you're probably looking at 4.25 in Waterloo region. And even no matter where we see capitalization rates or development yields ending up when interest rates are done rising, there's still going to be that relative yield benefit for the region. But we're seeing investment demand across the board for all asset classes right now.
If I can add one more thing, and for more of the employment investment that's going on. I mean, if you theorize that the investment community will follow where the tenants go, where the residents go, no doubt you've seen the tenant base split down the middle. About half of all major industrial and office lease transactions have been done by groups that are migrating and relocating to the region, and bulk of them from the Toronto market. But what, again, gives me a lot of confidence in the long term for the region is the fact that there's the other 50% that is domestic, localized tenants that are growing. And so that diversity, that balance, to me, gives a lot of security and really mitigates a lot of risk. If for any reason there was some issues in the Toronto market, we have the local market to help offset. And I would also say that the investor market has met with a similar balance in the way of industrial, as an example. No doubt the larger institutions, REITs, pension funds, fund managers, have really focused on larger developments, larger scale, larger tenants to meet those inflowing enterprise-sized tenants, whereas the local investor base that have been there for generations, some of them are really meeting the smaller market, the more localized tenant. And so it's a nice balance that you've got somewhat split down the middle of new inflows out of Toronto and nationally, as well as a local base that's growing and performing well.
So you touched, obviously yield makes sense, and the types of users that are coming out here as well. Now you talk about risk. What are lenders looking at when they're looking at risk in this market? Are all the same lenders out here as in every other market? Is anyone absent? Are they doing more due diligence on these deals, both the lender and the buyer, for that matter?
We're sort of at an impasse in the market right now because everyone's waiting for the comps to come and waiting for someone else to make the first move. Here October 6th, we're probably sometime in the next few weeks going to see another jump in bond yields. And so we're in a bit of a holding pattern, a bit of a wait and see. But what we've seen from the lending community is that they're increasingly, and this is kind of a main theme that we're trying to communicate in this report, they're increasingly viewing the fundamentals of Waterloo Region as, maybe not quite like the fundamentals of the Toronto area, but close, because you have that strong local economy, you have the population growth, you also have the spillover both from a residential and from a office industrial occupier perspective from Toronto. And so it's a positive story all around. It's a diverse economy. And so if you're a lender and you're thinking about the worst case scenario, I think Waterloo is very interesting because you're actually pretty well insulated. Being a diversified economy, you're pretty insulated from the worst recessionary risks. And I think that's being reflected in a lot of the conversations we're having, and it's being echoed.
One thing I would also add on the lender side is if you were engaging with a lender 10 years ago on the region, they would have asked, where's Kitchener? What's the University of Waterloo? Now it's very commonplace, well understood, and I would argue even reports like this are helping that market amongst other groups understand what the region is all about. And so no doubt when the country labels the region as a very important growth center for the success of our country, that's going to get a lot of attention from investors, tenants, and the lenders. And yeah, to Scott's point, we've seen definitely an attitude of more selective bets being placed by lenders and investors. Fortunately, the region of Waterloo seems to have a lot of conviction that as long as our national immigration policies are to bring in 500,000 people a year, and as one person once put to me, that's bringing in a Kitchener-Waterloo to Canada once a year. No doubt the Waterloo region is going to have some and benefit from some substantial growth. And so I think that's given investors and lenders a lot of confidence in the long term.
So you're getting at something that's really important to reinforce. And I think it's, we work in real estate, we think about things in real estate terms, but when we zoom out and think about the economy and just kind of the dynamism of Canada, and how things are going to look with the national economy over the next decade or so, it's a really positive thing when you have some of these medium-sized cities growing and you have more companies and more people wanting to be there. In the United States, for example, you have any number of cities across the spectrum where once people graduate from university, they go here, they go here, they go here. Canada historically hasn't had as many options because the jobs have been concentrated in a smaller handful of cities for the most part. So it's a really positive story demographically. It's a really positive story for the broader national economy when you have cities like Kitchener-Waterloo who are able to absorb more of the population, who are able to absorb more of the workforce, because what that does is it eases a lot of the pricing pressures that we're seeing, for example, in Toronto and Vancouver.
That's a really good point about concentration. Yeah, absolutely. And I guess on that vein, I mean, if you're looking at investors coming in, companies coming in, people moving into the region, is there enough being built across the different asset types do you have enough labor to deliver this product? And are the municipalities, like the cities, working with developers to really expedite and help this out?
I believe that the policymakers, the local municipalities are doing everything they can to support and meet that demand and growth. But it comes with the challenge of growing and going from what is a smaller market to a larger market, and that has growing pains. No doubt, speed to market in Waterloo Region has been one of its key advantages, aside from just pricing value. Site plan approval, as an example, for an industrial development in Kitchener-Waterloo may only take 6 to 9 months. You get into the Toronto market for the same thing. I've heard some horror stories of upwards of 2+ years. So there is definitely some benefit of being in a smaller municipality, but at the same time, because it is a smaller municipality, you may not have the staff to actually execute on all the demand. And so it's a good problem to have. I do firmly believe that the region is enough of an important center for the province and the country that they're attributing a lot of resources to the area to help meet the demanding need, the demand and the need. But it's definitely got its challenges as it goes through some growing pains.
So, Mitch, if you're sitting here talking to an investor today, what are the key messages that you want to deliver to that investor? What do you need them to hear as they look for opportunities in the Waterloo region?
Yeah, I think it comes back to the population growth and where we have diversity in that growth, which mitigates a lot of risk. And so, I mean, it's best of both worlds in having relative pricing value, but also a lot of growth potential in the future. To me, that's what you're looking for as an investor.
Yeah, and what I would say is, we work with a lot of investment funds from around the world. We work with a lot of occupiers from around the world. And when a lot of groups come into Canada, they hear this acronym of VETCOM markets: Vancouver, Edmonton, Toronto, Calgary, Ottawa, Montreal, the big 6 markets. What we want to communicate in this report is, those are the biggest cities across Canada, but when you think of southwestern Ontario as a region that can pool labor, can pool demographics from other cities within a short drive, you think of Waterloo Region as sort of the capital of that part of Canada. Now you start to consider that, if you're talking about London, Hamilton, Guelph, from a regional perspective, you're talking about the 4th biggest market in Canada. From a population perspective, the 4th biggest market in terms of real estate investment dollars. You're talking about, one of the top 3 markets in Canada in terms of the number of university students that you have within a relatively short drive. So, I think we need to do away with that VETCOM acronym because it doesn't fit kind of what's happening now within Canada, and Waterloo Region needs to be on the radars of a lot more of these groups.
Yeah, no, absolutely. So let's go blue sky here for a second. Clearly, when you look at what JLL is doing, investing out in the Waterloo region, there's obviously the assumption that you guys expect the market to do quite well over the next few years. So, what is your outlook for this market across the board?
Well, as you may have guessed, it's pretty good. We're strong believers there. That's why we're planting our flag in Waterloo. We think there's going to be really strong growth there. We think it's a great urban center that's going to see a lot of tailwinds over the next decade. And we're very optimistic.
Well, thank you very much, Scott and Mitch, for joining me today to discuss the key findings of your the JLL Waterloo Region Market Spotlight. I think, if anyone wants any more information on this report, obviously they can go to your website, www.jll.ca. Reach out to either one of you. I imagine you'd be happy to take any phone calls, emails to discuss the market. But other than that, I really thank you guys for coming today. And I look forward to reading your market updates on a quarterly basis.
Thank you.
Thank you.